Hi, good afternoon, everybody. My name is Natushka Lachman. I am the project officer as part of the creative department with, um, sorry, with the Trinidad and Tobago Trade and Investment Promotion Agency. A little mouthful that we're still getting a little used to saying, so my apologies on that. We welcome everybody here today. We have our co-host NEDCO with us. We have Mr. Toby, where we will be doing our tax compliance seminars. Sorry, I am just admitting some people in while I'm doing this. So we want to thank everybody for being here. We want to thank Mr. Toby for being here and giving us a great lesson. We are looking forward to it. And yeah, I'm going to let him take over from here.
All right. Hi, good afternoon, everyone. All right. Thanks for joining. As the moderator just said, I'm going to just give a background on the most exciting part of doing business, right? That's the reason why we get involved in business, to pay taxes, right? Right. So the focus in this presentation is about compliance, and we just want to look at how we manage the key information to make sure we are compliant with the tax regulations. All right. Everybody seeing my screen? Thumbs up if you are. Good. All right, so taxation. Favorite part of doing business, right? So the basics is a taxation that is basically a charge the government puts on income and profits on both individuals and businesses. And there are different forms of the taxes, various forms of taxes. We all know about VAT, which is the pinnacle of all taxes. You have the corporation tax, and in recent times, the property tax, which has recently been implemented and operationalized. Right? But in the tax journey, it's important to ensure, understand the principles, you must be tax compliant. Right? So in whatever business that you are in, you have to ensure that you are aware of all the laws that relate to your business, and including the exemptions, the due dates for filing, and ensure that you are compliant at all times, because non-compliance could lead to penalties and legal issues. That being said, taxes shouldn't be feared because you can plan for your taxes. Planning for your taxes is basically organizing your financial affairs in a way that it postpones or avoids taxes within the limits of the law. Right, so this includes making use of tax deductions, credits, and exemptions. And for example, and particularly in the industries that you're in, there are certain exemptions and credits that you can look at and seek out and ensure that you are compliant to access. What is the implication of taxes on small businesses? Well, the taxes generally reduce your net profit, right? And it's the primary source of financing, which is obviously the primary source of business financing. And it will impact your ability to invest in your business, sometimes even pay wages and compete in the wider economy. So the question of persons always asks, why should I pay taxes? Should you even pay taxes? Now, we all in Trinidad and Tobago, we enjoy some measure of the public goods and services that are given to us at a minimal, almost in some instances free, and some instances a minimal cost. So that's, for example, hospitals and schools that the government, through the remittance of taxes, which is their only source of income, they're able to pay for those public goods, right? You know, excuse. Another thing is that in terms of the taxes, it's a plan, and it is a measure often used by the government to reduce the consumption of harmful goods. So what you will find sometimes when the government wants to reduce the consumption of certain goods or services, they will put a heavy tax on it. And I think many of us may remember a few years ago when the government taxed alcohol, and that caused some problems, even up to today. And one of the other ways that taxes help us is it measures your performance. So you can basically, via taxes that you are scheduled to pay, you could get a clear idea as to whether your business is growing or it is shrinking. Because if a tax liability is increasing, that means that you are making a greater profit. If it's decreasing, that means your profitability is reducing, right? It also generates economic activity because the taxes that you remit to the government are used to redistribute it in the economy, right? Also, many persons learned this during COVID-19. You're more eligible for grants and different government incentives when you are tax compliant and you pay all the regulatory taxes. And most importantly, that it is a legal requirement to pay taxes once you are engaged in business activity and you're registered. Right? Right, so this is just a reminder. Many businesses flourish when the government invests in properly maintained infrastructure, and you have good roads and public utilities such as water and lights. Government can only do that with taxes, right? Again, it promotes economic activity, and the government also can fund programs with grants, social programs, and the different transfer payments that are used to stimulate the economy. So before we get into the point of paying taxes, there's things that you need to do internally. So we often say a good tax system in your business starts with you being able to organize your internal records in such a way that allows you to easily put your documents in place to be able to be aware of what your tax liability is. Recommendation is that you label all your expenses for submission. And I know many persons would say that in terms of the record keeping, they would say they keep all the records, but the recommendation is particularly that if you are ensuring that you're tax compliant and able to meet your tax deadlines, the recommendation is that you digitize your records. And in digitizing your records, it allows you to be able to file your taxes in a timely manner and accurately as well, right? It's important as well to have a team because the task of record keeping needs persons who can help you keep certain records on track. Because record keeping is not just the income and expenditure, it's also some basic information like customers and type of customers that you have as well. So in operations or businesses, we have two major categories of taxes that we pay, which is the direct taxes, which is the income tax, the health surcharge, the business levy, your green fund levy. And you have the indirect tax, which is the value added tax or the VAT, which many businesses tend to, which to me is the goal of a small business, because when you reach to the VAT level, that means your business is above a certain level of income or revenue, right?
Taxes: property tax, income tax, value added tax. In Trinidad and Tobago, individuals and businesses are required by law to pay various forms of tax. The issue of taxes continued to dominate headlines, so we met with chartered accountants attached to ICAT who answered some frequently asked questions about taxes in TNT. Here's Dion Batiste with the story.
Chartered accountant Shivanand Diopasad says there are some widely held misconceptions about the taxing process. Here he tries to clarify some of these.
What we refer to as PAY is really a mechanism by which employers withhold income tax from the employee. So really and truly, the tax that you are paying in the main is in fact income tax. And to clarify, for employees, once you are only earning salary income and you're only getting all of income through what we call a TD4, which is really your annual summary that you get from your employer. So once all of income is reported on that TD4 from your employer, you do not have a legal obligation to file an annual income tax return.
Even so, he says it's still advisable to ensure that employers make the appropriate deductions. While employees have emolument income, self-employed individuals have receipts from their sales or trade and expenses incurred. Here, Chartered Accountant Nicole Joseph explains the process.
The individual who is in receipt of emolument income, they actually pay over their taxes every month. The employer would deduct it and pay it over every month to the Board of Inland Revenue. When you're self-employed, there's nobody to do that for you. And obviously the expectation is the government is not going to wait for a whole year after you arrive at your profit to determine, okay, tax on this profit is X, so you need to give us this amount in tax. So with respect to individuals, self-employed individuals, they would be expected to pay their taxes on a quarterly basis.
In 2015, the Board of Inland Revenue introduced an automated process allowing persons to file their taxes online. To do so, you must have a TT Connect ID in addition to a Board of Inland Revenue number.
Once you have that, you can go online. And one good thing about the online system set up by the Board of Inland Revenue is that if most of your income comes through a TD4, you enter the information like your name and so on, your personal information. And the online form has an input section that looks like a TD4. So you could have your TD4 in front of you and you just fill in the spaces.
The online process is described as user-friendly and allows individuals to scan and upload documents and also expedites the refund process. Dion Batiste, C News.
That video is just telling you a little bit about the difference between emolument income earners and small business owners. Small business persons like yourself, the major point here is that there's a difference between the two, because as an emolument owner, income earner, if you work for business, your taxes are taken out on a monthly basis, the 25%, and on a monthly basis and remitted to the Board of Inland Revenue. For a small business person, that is not done, and because the government can't wait an entire year on when you do your accounts, your taxes are paid quarterly, right? That's basically what that is about, right? Right. So just to go back again, in terms of the three legal structures that the different types of businesses, you have the sole trader again, which is a single owner. You have the partnership, you have multiple owners, and you have a limited liability company, where is a minimum of 2 directors and the liability is limited. Now, that's just a note. So I'm not sure how many persons in this room would have filed personal income tax. Anyone has filed personal income tax post 2021. And if you have filed personal income tax post 2021, you would have had to do it through the e-tax platform, where you have a TT Connect ID and you do your filing online. This particular screen shows that, for example, persons who may have limited liability company who may want to file corporation tax post 2021, there is a provision for you to do it both online and offline, right? So these two links can give you the links to be able to do it offline and online, right? Right. So in terms of taxes, your initial engagement with the tax authorities, one, you apply for a BR number, and then you apply for a PAY number, and then you have to register, apply for a VAT number, or become VAT registered. Now I'll talk a little more about VAT later on, because VAT is not, having a VAT number and being VAT registered to pay VAT is not for everyone. It's for specific businesses that fall into a category based on the earnings of the business, right? So now there's some key terms that you need to be aware of when talking about taxes. Hi, sorry, you hear me?
Yeah, question
Go
with
ahead. Go ahead.
the slide before, right?
Yeah.
With the business, if you're paying yourself a salary,
Mm-hmm.
you have to pay your own PAYE and stuff like that. So is it that you're doing it twice for you and for the business?
Oh, okay. All right. So just to clarify, there's that information later on, but I'll answer the question. So in terms of the sole trader, you can't pay PAYE. I mean, you can't pay NIS and taxes for yourself. But if you're a limited liability company, then yes, you pay for yourself and you pay for the company separately. You understand? Because under for the sole trader, you use the same the same BR number, right? So that's why you can't file twice. You only file for yourself. Yeah?
Thanks.
Yeah, no problem. Right? So there's some key terms you need to be mindful of when talking taxes, right? Three terms there is chargeable income, corporation tax, and income tax in Trinidad, right? So let's go through this quickly. So for most persons who work for a emolument income or work for an employer, there's something called chargeable income, and that is income charged and taxes for a year of income, and that is only expenses that are deductible in a year, and those are wholly and exclusively incurred in the production of the income, right? And that basically means that your chargeable income is income minus the allowances that you allow, and once you take into account the allowances from your income, and then you work out what the tax rate is, that will give you your tax. What tax is chargeable, right? And usually, what will happen is that you will look at what was taken by the government minus what was supposed to be taken given your allowances and your income earned. And if there's a difference, you either have a refund or you have to pay the government back, right? And when you corporation tax, that is charged on profits of the company or an incorporated association, right? And the tax is 25% on chargeable profits. Now that has changed, it's now 30%. It used to be 25% on income below $1 million and 30% above $1 million, but they have amended that, I think, in 2023, and it's now 30% across the board. All right? Right. So for individuals, in order to pay your income tax, you must obviously have a BR file number, and in order to apply for the BR number, there's a screen later on, and it will show you all the documents required to apply for the BR file number, right? And that usually, when you're applying for BR file number as an individual, you should do that through the employer, right? It's easy, simplest and easiest to do that. But if you are self-employed, then you have to do that on your own, right? And the deadline is usually in March or April, and it can vary from year to year, right? So let me try this again, because this particular presentation is actually for persons in your industry. So I would like for you all to take a listen. Tell me if you can hear it. If you can't, I'll have to just send you a link, all right?
Good afternoon, folks. It's a pleasure to be here and to represent the board. I know there's an old saying that says great minds think alike. So I don't know if that's what we're going to apply here this afternoon. But Anisha actually did quite a bit of my presentation. Okay, let me start. The legislation that governs this allowance that we're talking about today is the Corporation Tax Act, and more specifically, Section 10 of that act, which deals with a lot of different allowances. But we're going to look today at section 10 as it relates to art and culture, all right? And within that section, there is an allowance for the registered artwork, which is the visual and performing arts. We have sponsoring companies, which is section 10J, production companies, which is section 10K, and sponsors of fashion industry. Those are the 4 categories that relates to art and culture. Just to briefly look at the sponsoring company, even though I know we are a production company, but because you can also get a claim under sponsoring company, a company that sponsors a visual, audio, or video production for entertainment or for education locally is allowed a tax deduction of up to $3 million, and this increase was effective 2013, as we heard Anisha say earlier. To focus on the production company now, which is who you represent, a production company is a business. You're operating a business, and therefore there are certain legal or statutory obligations that you have to carry out, and that one of those things would be to, of course, file an income tax return. Now, in the normal course of business, your expenses are allowed, but the government has seen it fit to encourage this industry to offer an incentive, and the incentive is really to uplift your expenses by a 50%. So instead of getting a normal 100% as you would get in any business, what you would get now to encourage the industry is 150%, and that's up to $3 million. A production company, as Anisha said, can also get a further, we'll have to do some verification here, because I see I'm saying 2 million and you are saying 3 million for the production company sponsoring a piece of art or artistic work or any sporting activity. And this has to be not your own, nothing related to your own business, as Anisha mentioned earlier. Okay? So, according to my calculation, you can get up to $5 million if you choose to engage in this kind of activity. Or if Anisha is correct, then it would be $6 million. What is required? The board requires a certification, and you heard a lot of that from Anisha, and I'm sure that you may hear it again, but the board requires a certification from, in addition to being registered with the ministry in the national art, you have to, and I believe that's the same certification we're talking about, where you have to be certified by the minister with responsibility for culture for a production company. The minister with responsibility for culture must do the certification. If you are producing something that would promote and reflect culture and entertainment, if you are promoting or producing something that reflects education, then the Minister of Education has the responsibility for that certification. And note, a deduction will not be allowed if you do not have certification. How does this claim work on our part? It actually reduces your chargeable income. So where in the normal sense, you would have a particular chargeable income. If you didn't have the claim, of course your chargeable income will be less if with the claim. The lower the allowance, I think some people always got a mix up here. Note, some people feel that when they spend this money in the production, the government gives you back that money. It is not a tax refund. It really is an incentive. We don't pay back the money that you spend to produce the production, right? What you actually get is an incentive, all right? And what it does, it reduces your chargeable income, so it could either increase your refund or lower your tax payable, as the case may be. Here is my calculation, which is similar to what Anissa did. It shows your net profit prior to the incentive. Your normal deductions, I say, is $12 million your net profit is, and your normal deductions will be $10 million. Your chargeable income will be $2 million. That's what we charge the tax at 25%. If you decide to go with the incentive, you're registered and all of that, it means that that deduction will now increase from 10 million to 15 million with the uplift. It means that you would now be operating at a loss, and not pay any tax. Where in the first instance, your tax liability for that particular year would have been $500,000. If you were registered, then you would have no tax liability. You would have actually been operating at a loss. And what this allows you to do is carry forward that loss into the other year. Okay? And this is just another calculation showing where the tax the tax liability is actually reduced by using the incentive. When and how is the allowance claimed? Well, and he said they talk about that too. The allowance is claimed when a tax return for the respective year of income is submitted to the board. That's the point in time that you make your claim. You would have done all your bookkeeping, all your records which you would give to your accountant, who will sort out your profit and loss account, and it is actually attached to your return for that particular income year. A company's financial statement must be submitted with the tax return. You want to know what you have to submit? You have to submit you have to submit your financial statement. You have to include in the financial statement, of course, the expenses of the production, which would be 150%. When is it claimed? Anissa said it. 30th of April is the date. You have 6 months later without a penalty. Your penalty is $1,000 for every 6 months that you're late. This is an extract of the schedule on the tax return that you must complete as a production company. There's a schedule for you. This is an extract of it. It lists your expenses, it lists what the actual expenditure is, and what it is with the uplift. Okay, this information is transferred to page 3 of your income tax return, Schedule A, and this is an excerpt of it. All right? And that's the end of my presentation.
That's right. So on your screen, you should be seeing the different percentages in terms of taxes that are chargeable, right? So you have the corporation tax, as I mentioned, it's 30% of the gross profit. The business levy, which is 0.6% of the gross income per quarter. And this is for individuals and companies, meaning to say for sole traders as well as companies. And for persons who employ persons, you have a health surcharge that you pay. And the green fund levy, that is on your gross income, and that's paid quarterly. And that is only paid by partnerships and companies, right? Next screen will be a more detail, right? So if it is you have to apply for your BR number, this on your screen on the right-hand side, you will see that the requirements to apply for it. You have, for the individual, you have the ID card, copy of national ID, right? A letter from your employer and your TD4, right? For persons who are self-employed, your certificate of registration and your income statement, some form of proof of income, and your copy of your national ID, your driver's permit, and your birth certificate. Now, generally, persons now starting out, sometimes this may be a bit of an issue. That's why I recommend you either do some management accounts, which you do a simple listing of the income and expenditure, along with some bank statements that you can submit to the board to prove that you have income coming in, right? So the limited liability to the corporations is a little more detailed. You have to have your certificate of a corporation, your notice of directors, notice of address, your copy of your national ID, front and back. You also generally have to have a letter also to go to the Board of Revenue, right, signed by the directors for submission to prove that the company is applying for this document, right? Partnerships, same thing, certificate of registration, a copy of your national ID, and a driver's permit or passport for each partner, and recommend as well submitting a letter on your letterhead of the company to prove that the company has agreed, the persons agreed together to apply for those things. All right. All right. So for the taxes, the sole trader, these are a listing of the different tax requirements for each one. So you have the sole trader, you have the monthly taxes for the employees, you have the health surcharge, and you have the NIS payments that you have to remit to the NIB every month. And you see a note here is not for the sole trader, but it's only for the employees. You cannot pay NIB for NIS for yourself. And you have the PAYE, which you have an annual deduction that you can file up to $90,000 for yourself, right? And then you have the quarterly taxes that you have to file, which is a business levy, which is 0.6% of your annual sales, no greater than $250,000, and this is after the 3rd year of registration. So it's not necessary to file it right away, but the recommendation is that you start keeping your records accurately so that when the filing time comes, it's a matter of course, right? And then you have a quarterly tax on your net profits, which is your income minus expenditure, net of those things, right? And then you have to do an assessment of what that projection will be quarterly. Do it quarterly, do your quarterly profit, and you file those things quarterly. Now, the VAT is slightly different. That is based on a projection of annual sales in the upcoming year. And if you project that your total sales will cross $600,000, then you have to apply to the VAT registrar's office to become VATable. And based on that registration, then you will be able to charge VAT, right? As well as net off what you would have paid. So VAT is what they call a netting off tax, where you're able to net off against what was paid by you versus what you would have received, right? And the final tax is tax on profit, which is 25% of your net profit. Again, that is paid quarterly. Partnership, similar vein. Same thing you pay for your employees, you pay health surcharge, NIS, PAYE. Under the partnership agreement, you can have an employment contract with the partnership, which outline how much you earn, and that will allow you to be able to pay NIS on your behalf because you now have an employment contract with the partnership, right? And then your quarterly taxes, again, is green Fund Levy, your net profit taxes, which is the income tax based on earnings of the partnership, and your VAT, again, same thing. The VAT is a tax only after you have crossed $600,000 or you estimate to cross that, then you apply for the taxes for that VAT registration. All right, and then the tax rate of profits is 25% on profits as per each partner individual tax return, right? So that's based on each partner and based on the partnership agreement, what profits they will be able to glean from the partnership, they are tax based on this, right? Then you have the limited liability companies, same structure, slightly different in that all the things that monthly taxes apply, all the quarterly taxes apply, and well, obviously VAT applies. The only major difference in this one is that the tax rate, right? So the tax rate for the limited liability company is 30 to 35%. The difference really is based on the industry that you're in. Some industries face a higher tax rate than others, such as banks and the petrochemical industry. Right, so this is just a sample of what your tax, what your BR schedule will look like. So you have on the left-hand side, you have the sole trader BR schedule, which will indicate your BR number, the account type, and your account, your business account. And on the right-hand side, you have the LLC contract showing the address of the LLC and all of the BR, all of the tax numbers relating to your particular corporation, to a particular entity. So in the sense of the partnership, you wouldn't have a corporation tax number, but you will have a separate BR number that is assigned to the partnership. And you will obviously have the same things, the green fund levy, the health charge, and attached to the partnership. Right? It is recommended if once you are preparing yourselves for taxes, that you track these 9 elements of your business, which is the cash movement, your sales, your purchases, any donations being made, your stock inventory, your production, and the employees, the start date, end date, and the taxes paid on their behalf. Because the tax authority can at any time, well, after you file taxes, decide to do an audit. And when they do an audit, these are some of the things they would want to look at to ensure that your books, whatever you stated in your tax returns actually was reflected in company data. Right? And this is an excerpt from the Income Tax Act. And it says every person required by this section 7501 to keep records and books of account and shall maintain every such record or book of account and every account of voucher necessary to verify the information in any such record or book of account for a period of at least 6 years from the year of income or 3 years from the date of tax return is filed, whichever is later to which record relates, right? So therefore, you have to keep the records for as long as possible. And the recommendation is keep it even beyond, because you never know that some of the records may be called upon to be reviewed at some point in time. The recommendation is, even if it is you may not keep the physical copy, you need to at least have a scanned copy, because you can be audited. Right? So this is just a reminder of what emolument income is. It basically means salary, wages, right? Overtime, bonus, all of those things that come from you working for someone else, right? Stipend, commission, all those things that come from working for a salaried contractual position, right? Whereas non-emolument owner is required to pay income tax to the Board of Inland Revenue. And again, for the non-emolument owner, it is paid at a rate of 25% up to $1 million and 30% above, right? This is where you're an individual or sole trader, where you earn less than $1 million, you pay, the tax is calculated at 25%, and anything above $1 million, it goes at 30%, right? So the business levy is another tax that you need to pay as a business person. And the liability for this is all companies and individuals in receipt of non-emolument income in excess of $500,000 per annum. And the current rate of the business levy is 0.6%, and that is based on your gross sales or gross receipts, right? One thing about it is that most persons seem to be afraid of taxes, but when you look at the range of the taxes, the amount or the interest, the rate of tax is rather small. There's nothing to be afraid of. And this is just a simple calculation of it, right? So let's just say in 2022, the first quarter is payable before the end of the quarter, right? And that is sales receipts that occur from January 1st to March 31st, right? And therefore, that that payment is total up 2 to 3 days before the end of the quarter and payable on the last of the quarter. Right? And Green Fund Levy, I don't know how many persons have heard of it. That is a charge that is based on your gross sales and receipts. The purpose of the Green Fund Levy is that many years ago, it was recognized that the environment was facing negative impact of industrialization. So the Green Fund Levy is a tax taken out of your gross sales and remitted to the Board of Inland Revenue and held by an entity held by the Green Fund, and they then redistribute those income to fund sustainable projects that will re-energize the environment and will help us live in a more sustainable way. Right? And the Green Fund is computed on the current sales and receipts of the respective quarter. And the first quarter is payable again on or before the 31st of March. Right, so all of these taxes basically indicate to us that you have to keep your accurate records, because the taxes are payable at specific times during the quarter. And once you miss the payment deadline date, you can be liable to penalties. Well, the health surcharge, this is a payment this is the payment on behalf of your employees. Right, and this is basically all individuals who may have to furnish an income tax return, right? And it is based on pensionable income only, right? And these are the rates there, right? So if any of you will file taxes, you'll realize that when you look at the health surcharge, it's weighted based on estimated earning per month. So the statement is that when total income averages less than $469.99 per month, the rate is $480, and when income is over $469.99 per month, it is $825. I think most persons will fall into the second category, right? And this particular payment is paid on a quarterly basis. This is just a rehashing of the income tax. It is calculated based on a chargeable income, multiplied at a rate of 25% or 30%, 25% for the first million and 30% on the next one. Right? The chargeable income is really total gross income minus all your allowable business expenses, plus a personal allowance and other tax deductions. So, for example, the individual who is a sole trader, he will have allowable business expenses, right, which we will give you an outline of later on, and also his personal allowances that you have. You know, everyone is entitled to $90,000 personal allowance, right? So that when you are doing your taxes as a sole trader, you are allowed to apply for these exemptions. And when you apply these exemptions to your income for the year, you will get what is your chargeable income, meaning what income that the government can actually use to determine what was your taxes for that period, right? This is just a rehashing of the same, right? Right, so this is how you will go about calculating your tax liability for the year. So let's just say, for example, you make a net profit of $200,000 in 2019, and at that point in time, I believe it was $72,000 in personal allowance. Excuse, that has since changed. It is now $90,000. So as of 2023 is $90,000. Right, so you would minus that from your personal allowance from your net profit as a sole trader, and that would be your chargeable income. And barring that you have no other business expenses, or that you have no other claims, that you will be able to calculate what your installments will be for the month in terms of taxes. right? There's an actual set schedule in terms of when taxes are due per quarter. You'll see here March 31st is the first time it's due, then June 30th, September 30th, and December 31st, right? Which is basically a quarter of your profits that is projected for the year, right? And this is a listing of the allowable deductions for persons. So personal allowance, as I said, is 90. If you pay for tertiary education, it's $72,000. If you're a first-time home owner, it's 30. And if you contribute towards an annuity, it's $60,000. If anyone pays alimony or maintenance, it's 100%. And if you donate to charity, it's 100%. And these are just a listing of some of the deductions that you are entitled to once you're operating in business, or even as an emolument owner. These are some of the allowances that you can have. Venture capital investment. Well, everybody knows about it. I think most persons know about the CNG. You can get that as well, and solar power. For the business, these are some of the allowable expenses, wear and tear, which is like depreciation on your assets, or right? Bad debts, those are some of the things as well. Management charges, likely. Right? Another listing of all of the allowable expenses. So all of the expenses that you incur as a sole trader, you can now deduct that as well, and that will obviously reduce your income and therefore give you a net profit. And upon calculating what your net profit is, that what will be able to calculate what your taxes are owed to the government, right? Right, so in this one, you will see that there's one highlighted in yellow. I left it there because prior to 2021, there was an allowance for sole traders to claim for any entertainment expenses that they incur in terms of dealing with clients. That, I believe, has since been removed. And I left that there because sometimes some of the allowances exemptions that accrue to individuals and companies change from year to year. So therefore, when you are filing your taxes, you have to follow the tax code and see what is allowable for the year in question, right? Right. So one of the things we mentioned is a VAT. Well, VAT is we all know that it is a consumption tax. That is a tax based on every stage of production, right? It is a tax accrued to every stage in the production cycle. It's at a rate of 12%. And it is only where your sales for the year is in excess of $600,000. That changed recently, I think in 2023 or 24. It used to be $500,000. The government opted to $600,000. Right? Right, and it's only VAT registered businesses can deduct VAT that they pay when purchasing goods and services for the business from VAT that they collect from customers. As I said, it's a netting off tax, meaning you look at all the VAT that you would have paid versus all the VAT that you would have collected. And if you paid more VAT than you collected, then you have a VAT refund. And if you collect more VAT than you paid, then you have a VAT, then you have to pay VAT, right? And as we know, there are some goods and services that carry a zero VAT charge. Right, and the period covered by the VAT return is referred to as the tax period. The standard tax period is 2 months, and persons registered for VAT are required to submit a return and remit VAT due for each 2-month period. Each return is due on or before the 25th day of the month following the end of the tax period. And to note, there are 2 categories for the 2-month period, and just to verify that these 2 categories have different time frames within which they are due. See, category A is from January, March, May, July, September, November. B is February, April, June, August, and October. And to determine what category you're going to fall into, you have to contact the VAT Administration Office and they will indicate to you. It's important to note as well, there's two different things in VAT. You can get a VAT clearance certificate, meaning to say go to the VAT authority and indicate to them that you're not likely to charge VAT, and therefore they will give you a certificate saying that you are not VATable, you're not entitled to charge VAT, right? Or you could get VAT registered, which means that you're now able to charge. So this last slide here is just a sample schedule of how someone will, when they set up their accounts, this is how they will calculate their VAT on a quarterly basis, right? So usually if you have an accountant, this was generated from a simple Excel sheet that I would have developed for our client, and this would track the VAT as every transaction takes place. The formulas in there. Every transaction that takes place, the different tax requirements are calculated. Right? So at the end of the month, because it's already done, you're able to now just do an audit as to make sure all the information entered is correctly, and you're able to know how much your business levy is, how much the green fund is, and how much your corporation tax for each quarter is, and therefore you're able to determine what your total tax payable is. All right. So as the video is now working, I just wanted to tell you all that you have some good news for those of you who may be in business and not file your taxes as yet. The government has extended the amnesty to March 31st. Right. So that's good news for everyone. Right. And sorry for the glitches here and there, but thank you very much for the time. If there are any questions at all, you can feel free to ask. Again, just a reminder, our 5 locations. We have one in the north, in Queen's Park East, which is the NIB building, in the east, which is at 125 Eastern Main Road, Tunapuna. South is 81 Southern Main Road, Edinburgh Village, Shoguanas, and the south branch is 45 Independence Avenue. And with Tobago, it's at number 2, Glenwood, Scarborough. So any questions, feel free to ask. And here,
Thank you, Mr. Toby, for that great presentation. I know that we do have one question here in the chat from Sasha. She's asking, if someone is a sole trader, they don't have any employees, and they're making less than the 90K per year, are they required to file any taxes?
Legally not required to, but I would recommend that you do, simply as a record. It is beneficial to you to file, right? Because also, as I said, what you look at is your exemptions to see what the exemptions are, and it's a good way to get in the habit of, because remember, your goal is to be able to cross that 90K and to become in a region where you can actually make a profit that will allow you to be able to pay taxes. Yeah, so.
Okay, and do we have any questions from anybody else? You all could either feel free to type it in the chat, or you all can also unmute and ask any questions.
Can I just ask a quick follow-up question?
Sure.
The amnesty that was extended, does it cover for the taxes that should have been filed for the last year, or is it just everything that it was historically not done?
I believe it's everything. They extended because the amnesty was for everything, and I believe it's everything up to the 31st of March.
Thanks.
Are there any questions from anybody else? I know that it was a good bit of information, and especially when it's taxing, it's a lot to take in.
I do have another question,
Of
sorry.
course, no, go ahead.
Um, for persons who may need some support, this may be new to them, what would you recommend to be their next step? Is it an accountant that we should be engaging, or is there an agency that assists?
Well, well, I recommend yes, you engage an accountant. But my suggestion is that before you go to the point of engaging an accountant, try to keep good records, because the accountant fees goes up based on how well you have goes up or down based on the quality of records that you keep. Right? Because if your accountant has to come in and do everything from scratch, that's an additional cost. But if you set up a good record keeping system, then the accountant just has to come verify and file the taxes, it's a lot cheaper. Yeah.
Thank you.
Right. So, and just to add to that, our training department always sometimes organizes some good classes in terms of record keeping and cash management. So just as a suggestion to invest in yourself to understand the record keeping and also taxation. But it's more deep dive in terms of what needs to be done for taxation. I think you could probably look at attending some classes to keep yourself up to upgraded to what was required for your sector and generally as a tax department.
Is it also possible that you can share all of the YouTube links in the chat for us as well, please? Seeing that we weren't able to kind of see them, if we can access them. Yeah.
Sure.
Okay, and then I have another question here. For sole traders who only income comes from their business and they have no employees, is it so this one is it mandatory that they pay health surcharge?
Right. Okay. I know that from an NIS perspective, you can't pay that because that is only for persons with the emolument income. I don't believe that you can. The normal recommendation in a case like that is that you invest in some sort of insurance for yourself because you can't pay those things. Yeah, it's not designed for sole traders, for non-emolument owners. Yeah.
Okay. Anybody else with any other? Yeah, that health surcharge is, I believe what he's trying to explain is health surcharge is linked with NIS. So that's, I think, is what he was saying, that you, as a sole trader, I don't believe you can do the NIS payments, can you, Mr. Toby?
No, you can't do the NIS payments for yourself. Yeah, no, you can't, only for your employees.
So for the same thing that you can't do that with the health surcharge.
Honestly, I'm not 100% certain. I believe it falls under the same rules as the health surcharge falls under the same rules
Same as NIS. I
yeah,
believe so
yeah.
as well,
because
too.
yeah, because those things are calculated based on your income, based on employment, right? Whereas most sole traders, they don't have like an employment contract with their business where they set aside a salary. Yeah. Usually the money coming out from them is can be referred to as drawings. Yeah. It's treated slightly differently.
Does that help answer your question? Okay. Is there anybody else who would like to ask any questions? Okay, so if not, we will be sending out an email with the recording from the session, and you'll be able to get all the information from the slides, etc. like that. We'll also include the YouTube links in that email as well for you all. We will make sure to get it from Mr. Toby, and he'll put it here for us. And yeah, we want to thank you so much for everything and for your presentation, your time. We want to thank everybody else as well too for joining and for your time on this. It's greatly appreciated. We do have one more session. It's not a webinar. We have an in-person. It's not partner with NEDCO, but on our side, we do have a OPR training that will be in person held at Export TT House. So please feel free to check out our social media. You will see the information and we will also email it to every participant as well. So thank you very much and have a great day, everybody.
Okay, bye-bye.